Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be going over whether dollar cost averaging is still a good strategy for Bitcoin accumulation. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin profitable days chart, and as you can see, for 83.7% of Bitcoin's entire price history, the position would currently be sitting at a profit depending on when you bought Bitcoin. But obviously hindsight is 2020. It's very easy to say I would have bought Bitcoin in 2014 with a lump sum and be up tens of thousands of dollars right now, but unfortunately it isn't that simple. Timing the market is one of the most difficult jobs within trading and investing, and especially within the volatile and speculative cryptocurrency markets, it can be even more difficult. So you'll often hear a lot of people advising to dollar cost average into your cryptocurrency positions. Now this of course is never a bad idea. If you're holding Bitcoin and accumulating for the long term as you believe in the long term success and potential for profitability of Bitcoin and cryptocurrencies, then always accumulating more certainly isn't the worst idea. However, blindly dollar cost averaging will often see you buying at price peaks and not really maximizing your risk to reward with your Bitcoin position. Instead, what we can do is use some very basic on-chain metrics to actually try and time the market with a higher degree of accuracy. So we can still actually dollar cost into our positions, but rather than just buying blindly, we can wait until the right opportunity arises and then seize that opportunity for the best chance of success in the following cycles. So what we can actually do is use an online calculator such as this one to see how dollar cost averaging would actually have performed as a strategy. So just for this, I've assumed 5 years ago to the day that I filmed this, you are investing $100 weekly. Now obviously some people will be able to invest more than that, some maybe less than that, but this is just to keep the math simple. We're going to assume that you are investing $100 every week for the previous 5 years. Now what we can see is if you just lump summed on that date, the 9th of January 2018, not long after Bitcoin's price peak in the 2017 bull cycle, you'd have about 1.67 Bitcoin at your disposal. Not bad, but you're currently at a profit of around $1,800, which isn't ideal. We're in Bitcoin and cryptocurrencies for the potential of large profits, and 7% over the course of 5 years isn't exactly anything to write home about. However, if you had dollar cost averaged in every week $100 for the previous 5 years, you'd actually currently have 2.44 Bitcoin as opposed to 1.67. So the same invested amount, but rather than lump sum potentially getting in at a bad time, if you just dollar cost averaged every single week, you currently have a Bitcoin position that's up about 56% in profit, which again is definitely a better level of profitability, but not exactly anything to write home about once more. Just about 11% a year is great, and you'd probably be in traditional markets, but really we want to try and do a little bit better than that. So what we can do is use a very simple on-chain metric like we have here on lookintobitcoin.com, the MVRV score, which is looking at the market cap of Bitcoin, which is the current price multiplied by the circulating supply, the realized cap, which is the realized price, or the average last transactional value, the cost basis of all Bitcoin on the network multiplied by the circulating supply, and then we're dividing that by the standard deviation or volatility of Bitcoin's price. So again, it sounds like a little bit of maths there, but if you'd like a little bit more clarification on exactly how we're figuring out this figure, if you come on to lookintobitcoin.com and just scroll beneath the chart, you'll see a lot more of information regarding this metric and how it is useful. But right now, we can instantly see that the MVRV score gives us really good areas to potentially purchase and accumulate discounted BTC. As this is taking into account the realized price, we can see when the market cap or the current Bitcoin price is beneath this realized price or the realized cap, it indicates that a majority of Bitcoin investors are currently at a loss on their positions. Now obviously this isn't ideal, and historically this has indicated a capitulation area for Bitcoin. When most people are losing money, obviously it's not a great time to be in the asset, but actually for the strategic investor, this is never a bad area to consider accumulating more Bitcoin. And this, once we take into volatility, gives us the MVRV score. And we can see, historically in every single Bitcoin bear market, we've had extended areas where we've been within this green buy territory on the MVRV score. So for example, here we had around 10 months before about a year in this 2015 bear cycle. In 2018, 2019, we had about a 5-month cycle before just a few weeks during the 2020 COVID crash. And now we've been sitting in this buy zone for around 7 months, which is actually the average duration we spend in this buy zone. So potentially we're coming to the tail end of a bear cycle, but we have to be open to the possibility of anything. So we'll just assume we'll stay in this buy zone for a little longer. But if, again, we just assumed that you first heard and started investing in cryptocurrencies 5 years ago to the day, but you didn't want to just blindly dollar cost average into your Bitcoin position, but then again, you didn't want to try and time the market and lump sum all at once and potentially miss the bottom or buy the top, which I'm sure we've all considered or even done before. If you actually implemented a strategy such as this one, where you actually accumulated once Bitcoin had reached this green buy zone on the MVRVZ score, this would actually be a very good strategy for accumulation. So I've run the numbers, I've crunched the data, and if we assumed that rather than just lump sum buying 5 years ago, you saved all the money you would have invested. So in this example, every week $100 you put to one side ready as dry powder to try and capitalize on discounted BTC, and you waited until finally we dropped into this green MVRVZ score here and assumed as the average is about 7 months of this MVRVZ score being in the green zone, you then divided up your capital that you'd saved, which in this case would be just over a year's worth of capital, and then invested that again every week as Bitcoin spent beneath this MVRVZ score into the green zone here. You'd have actually accumulated 1.5 Bitcoin with an average entry price of $4,000. Now, as we said, this isn't the exact price bottom on Bitcoin, which is closer to $3,000, but it's certainly better than picking it up at $10, $12, $15, nearly $20,000. If you were just patient, disciplined, and waited until the right opportunity, you could have accumulated over multiple months at prices that dipped beneath $6,000 and have an average entry price of $4,000, picking up 1.5 BTC in the process, which is obviously a substantial amount of Bitcoin. If we then once again assumed that you just kept your USD accumulating or whatever fiat currency you're purchasing Bitcoin with through this area where Bitcoin wasn't in the buy zone, and again during this COVID 2020 crash you started heavily accumulating BTC as it came into this buy zone, you've actually managed to pick up a whole Bitcoin at an average accumulation price of $6,000. Once again, not the exact bottom. The COVID 2020 crash bought prices of around $4,000 at the absolute low, but again, considerably better than trying to time the market. It's a much easier and much stress-free method. And then again, you see Bitcoin climb up in price, and again, we're assuming no profit taking here, purely accumulation for more BTC. As Bitcoin crossed once again into this buy zone just a few months ago, and you continually were investing with your dry capital that you'd been saving up throughout this bull market, you'd currently have accumulated 0.7 Bitcoin with an average price of $19,000. So currently above the current price of Bitcoin, but as we can see, historically these times of Bitcoin's price being substantially below the realized price don't usually last long. So even if your average accumulation price for this current bear cycle is $19,000 and it's not the exact price bottom, but you can be rest assured, if history is any indication to go by, that in the following cycle will most certainly reach levels substantially higher than $19,000. So over the previous 5 years, if you'd implemented this strategy, you'd have accumulated 3.2 Bitcoin with an average entry price of around $8,400. Now this is your total investment of around $27,000, but gives you a current Bitcoin valuation of over $55,000. If we go back to this calculator here, you can see we've got $15,000 more dollars than we'd have just blindly DCA'ing into Bitcoin. We'd have 3.2 Bitcoin as opposed to 2.44. And our current profit would be over 100% as opposed to 56%. So nearly twice as effective trying to time your dollar cost averaging just using one simple on-chain metric tool such as the MVRVZ than just blindly dollar cost averaging or trying to time the market with a lump sum investment. So just to summarize, dollar cost averaging into Bitcoin is still a very effective tool for Bitcoin accumulation. While blindly buying Bitcoin at cent intervals such as every week, every month, regardless of current price, is definitely a viable strategy, we can use a number of on-chain metrics to accumulate during the periods of the highest risk to reward, because we don't really want to be holding through substantial drawdown, and we really want to be accumulating when we know that there's a huge amount of upside potential. But we also need to factor in that this was just blindly accumulating Bitcoin. Obviously right now you'd still be in a substantial amount of profit, but we need to acknowledge that taking profit on your Bitcoin positions at the highest possible prices is really the way to lock in and secure the highest amount of profit possible. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And don't forget to check out our new live price page, which gives you a multitude of Bitcoin insights so you can really try and improve your Bitcoin trading and investing. Thank you very much for watching, and I'll see you in the next one.